All right. I posted last week about the smart mortgage, and I thought it'd be cool to have Michelle and I talk to you guys about our experience with it, and then we're going to show an example of how this works. And this is full first time experience for her. This is not rehearsed. I want her to give y'all her natural reaction to the information I'm going to share, and I think it's going to be helpful. So let's first of all, let's first of all tell my story of how I first got introduced to this program and what we were doing and how this was back in Texas. This was like years ago.
Texas. No, we were still in Denver. I specifically remember it very well. Do you really want me to tell the real story?
No, no, no. We ended up implementing it after we
And
moved to Texas.
okay, we did.
No, it's not how you remember
You
it?
signed up for the program. Was it
Yes.
Reliant or something
So
like that?
this
You watched the
program,
podcast.
yes.
I
The,
said,
the redhead guy.
I'm not paying.
Yeah.
How much was it?
I don't remember.
I said, we're not going to pay just to
You
get
don't need to
access to
pay
the
to get
loan.
access to this program. So
When we did it, he watched the podcast
yeah,
and he was all excited.
super excited.
And to actually find the lender, you had to pay,
You
was
have
it
to pay.
15 or
There's like a $1,500 cost to be part of this
Yeah.
program. And this guy,
Before COVID,
that was before
we were
COVID.
doing Dave Ramsey and paying everything off,
Yeah.
so it was a lot of money.
She wasn't a fan of
So I
it,
won't
long and
forget
short.
that loan.
But here's the deal. We put it on a property and we saw it work. We ended up selling that property, but afterwards, when I tried to find that lender again, they discontinued the program. So this was called Replace Your Mortgage. Smart Mortgage is basically the same thing. And what it does is it's accelerating the payoff on your loan, right? So what we're going to do is we're going to share the screen. I'm going to show you an example of how the numbers played out, and we're going to watch my wife give us a reaction. So let's share the screen real quick. Okay, so here's what happened. Well, I'm going to put it in here for the first time. Let's see. Um, so we're gonna go. This is taking too long. Sorry.
So the first house that we did it on was a rental that we bought in Florida. We just started real estate investing. I think we
Yeah.
bought it for like 115, 130, way before COVID, way before COVID. So that's when prices were so much cheaper. And we actually ended up not keeping the house long enough for it to have a huge impact. And I had also already got distracted and we were doing it, but I wasn't really tracking. And then once we sold it, it was kind of like, did it work or not? I don't really know. So we'll tell you. He followed the numbers and watched the numbers on it.
So this is the scenario that we had on our first property that we did this on. Okay, let's say the value of it was about 250. The balance that we had on the loan was it wasn't 250. Okay.
It was like 141, maybe max 160. It was
160. Let's give it 160.
Yeah.
Okay. The balance on it, I think, was 125. At that time, we were making about 12,000 together, and our expenses per month was maybe 7,500. And this is every expense, not just what shows up on your credit. This is grocery bill, anything you're paying for the kids.
Those highlights,
Yeah,
all of it.
all of it, right? And then this was the rate that we were refinancing out of, and I think our payment was maybe 912 or something like that.
Ooh, I miss those kind of payments.
Yeah. All right, now watch this. When we refinanced it into this smart mortgage, this side all right here is what shows us the difference. So we're paying off the whole loan in 2 years and 7 months. This was the trajectory of how fast we're going to pay this off before we sold this property. So is this making sense, babe? So on the left side,
2.5 years. Yeah.
2.5 years.
By throwing all of the income in, all of the income out,
Yep.
and then there's like a $3,500 difference that we're putting down on it. But it's basically instead of using a little fingernail to tap down the mortgage, you're using a hammer. Sorry, the interest.
Yes,
You're
that's exactly what's
slamming down
You're
the
beating that
interest.
interest so hard because you're putting all your income in as a payment essentially, which is going to principal. So what's happening is every month interest is coming out and it's calculated by the principal balance. So look at these differences. With a smart mortgage, you're paying this thing off in 2 years, 7 months. By that time, you still have this amount left on a regular loan, regular 30-year loan. This is how much of interest you still have left to pay. And then if you come down to this part here, look at this equivalent rate. So this is the rate that would have been on a 30-year. And let's see, yeah, so in these 3 years, in this 2.5 years, you're paying this amount in interest versus this amount in interest. But look at that difference in the rate, the equivalent rate of what you end up doing when you're paying it off that fast.
It kind of feels like compound interest, how that feels like it's magic or something.
Yeah,
With investments and such, but it's like reverse. So I think too, you got to put your numbers in here. You got to see what it actually looks like for you. And then first look at your mortgage payment and look how much of that chunk actually goes to pay down your mortgage and how much actually goes to pay down the interest. And
yeah,
it's like your first couple of years, it's like 80-20 or worse. I don't know what
yeah.
is it?
It's a whole bunch that you're
It's
paying,
your most of your
mostly
payments.
interest up front.
And so this allows you to pay so much more on principal.
Yeah.
And you also still have the flexibility. Like that scenario he put in, it has us paying an extra 3,500 every month basically, but you don't have to do that. You can put it in, take it out as much as you want. It's almost, is it similar? Can you work it like a HELOC?
Basically.
You put your money in, you take your money out, and you shake it all about however you want to do it. But it does encourage, just instead of every month having money coming in and out of your bank account and the bank earning interest on your money just sitting there. Anytime you have money in your bank account, it's yours, but still the bank is making money off of you.
So take a look at this graph. This is just to give you a different perspective of it, of how fast you're actually paying it off. And if you scroll down here, you can see, here's the math. Here's what's happening every month, right? The interest that's actually being paid is on this column here, this third column. And the charges is basically your expenses. So you're putting all your money in, all your income in, all your expenses is going out. But because it's a revolving line of credit that you're accessing, that's what's happening to the principal. That's why the principal is going down so fast, is because of the contributions that you're making towards that principal. So,
and there's also less interest because the amount of money you're letting sit in there, even though it's for a short period.
Yeah.
Even if you let money sit in there for 2 weeks, that's 2 weeks less of interest you're paying on that money. That's another way it helps pay down, helps your interest payment be less every single month. So we're doing this on one
we just
rental.
Financed the rental
and the rental had a 5-year note on it and it came up. So Zoe was like, let's do it. And I was like, okay, let's do it. Why not? He showed me the numbers and it's a perfect property because it's worth like 220. We only owe like 85K and he just showed me the numbers in the graph and I was like, oh,
pay it off in
2
years.
Mm-hmm. I don't see how this could go bad.
Yep. And then the plan is after that, because our goal is we want to pay off all of our rental properties.
Yeah, once we do this one.
So we're going to just roll it into the next one.
Yeah. And we also have that flexibility to be able to put it in, put the money in, pull it out when we need to use it. We're not trying to be rental poor, but we take everything into there and take every penny we have and put it in there. So anytime we need to put it in, put it out. We just had an AC broke, so we're gonna pull the money out, fix that, and keep going.
Exactly. So you guys can see this graph. The cool thing is y'all can let me know what your numbers are and I can put this graph together just for your specific numbers.
And he can even send you a sheet where you play around with yourself if you want to put different properties in there or your primary. And
then we can set up a Zoom call and do this exact process with you. So
what is this kind of loan called? I've seen
there's multiple different types of lenders. So we have 2 lenders in our database that do them. One of them calls them the all-in-one loan. The one that we just about to close with is called the Wealth Builder. That guy that is on social media, the redhead guy, he calls it replace your mortgage. He's got like this whole replace your mortgage university.
That's go. When I find something that I want to try, I go on YouTube and I watch every video I can find on it, and so I can hear the pros and cons until I have it memorized front and back, and that way I don't feel nervous or feel risked. So go online, watch those examples, and also do your own research. See how it works. See what people are saying.
But know now that this is a product that is starting to become more and more prevalent. And we, as the largest broker in the country, we have 2 lenders that offer this product. And we've actually worked with a few clients and have gotten positive feedback from them as well. So we've got the experience of doing this on the borrower side. We're just about to get another loan, this exact loan for another one of our rentals. So we've got that experience to talk through with you on, but at the same time, we also have had the training from the lenders that we have in our database that are bringing these programs out. So it's a game changer, y'all. If you can see how it works on your own numbers.
Yeah, can we please post though in like
Yes.
1 year where we're at with this
Oh
loan?
yeah, yeah. We'll do a follow up. We'll do a follow up for everybody. So yeah, we wanted to present that to you all. Like super excited about this program. So reach out if you want to go through the numbers with me, and let's see you save some crazy money and interest
Yeah,
on your mortgage.
let's do it together.
Okay, y'all take care.